Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this update video on really the euro dollar setup. Video that I made last week was on the channel, which was the Forex technical analysis. Where is the best place to sell the euro dollar? And if you haven't watched that video, please watch that first before continuing on watching this video. So if you have watched that, this is just a video update really, and I'm going to be showing you my entry as well as obviously the idea behind this. So we knew that this area here of support, term resistance wasn't the best place to buy. Prices, I kind of expected prices to get a few traders and stop traders out. Sorry about that. And continue going higher. Now, this was always going to be the best place to buy. So once prices came up into this area, this is where I was stalking. So, applying the supply and demand order equation. And again, if you're not familiar with that, if you go to the YouTube channel, video on course on that, nearly an hour long, have a watch of that, where I talk about supply and demand order equation, the motives of traders and why they're entering and exiting on a technical level, right? And as well as horizontal, diagonal, and dynamic, support and resistance, and how to apply them to a chart, right? So prices did come up here. I was looking for an entry. From a value perspective, I knew that this was obviously value within this supply zone. It's proven, right? Then it was just a case of adding supply and demand equation to this area. First of all, we got a nice, I got a nice outside, what I would consider an outside candle, right? It's what I also call a capture pain candle. Love this this setup on the 4-hour chart. So my entry was around here, and then obviously applying the order flow equation, supply and demand, in this case supply, so horizontal support and resistance, where a new trader is going to be entering around this area, right? Where a trader is going to be taking profit. If you bought down here and you didn't take profit here, you're definitely going to be taking profit where around here. And if you bought down here, you have to sell to exit, right? So a sell order, which is supply. So you've got new traders, and you've got, which is willing supply, and then you've got forced supply from take profit orders, where traders are forced to kind of exit before a little retrace like this. What you also had was dynamic support and resistance. So dynamic being moving averages, and we had not the 100, 200, we had the 50 daily moving average, right, come up into this area. So from daily time frame chart, right, you had the, I can't remember which one the darker grey one is, if it's either the EMA or the SMA, but it's the 50. We came up into this area here, acting as dynamic resistance. Traders again will trade that either as a bounce or as profit taking reversion to the mean type trades. So net you should have had supply here. Now how much supply we have is anybody's guess, but the question we always ask is when we're entering a trade is why there should be more supply in this area than demand, from a technical but also from a fundamental point of view. Fundamentals being macroeconomics and monetary policy, right? Why should the dollar get stronger? Why should the euro get weaker at this exchange rate? So there was pretty much the setup, right, and an entry. Now I don't know whether this trade is going to work out, right? It could, it couldn't. I've got to take the trade. The trade is the trade. Manage my risk, and if prices do continue to go down, right, then I will be taking, aiming anyway to take some profit somewhere around the lows. And this represents a nice 3.5, 3.6 to 1 type trade if we can get down to these lows, or at least down to another problem area, which would be probably around this 1.13 area, around here. So it still represents a decent trade. What we also had going for this trade, and something that I tend to go over in the weekly videos, is the looking at the Dow Jones Dollar Index. Now, Dow Jones Dollar Index on the daily time frame in my weekly videos I go over every Sunday. Prices did come down into this the top of this demand zone, right? And if you zoom down into the 4 hour, you can see where you had, you know, levels of resistance, and all support and resistance zones are past supply and demand zones, right? That have been broken, right? And yeah, so we had the level of support come down here. We touched this demand zone, the top end of this, put in this nice outside candle. So bullishness on the Dow Jones Dollar Index, which is just a measure of dollar strength against the major currencies like the euro, the yen, and the pound, right? So we had the confluence of dollar strength coming in at a demand zone, and then going back to the euro dollar trade, right? Then it was time to really, you know, enter here. And again, I'm not saying that this trade is going to work out, or this trade is going to go, you know, anywhere near this, right? All we do is we take the trade, follow the process, and manage our risk. Don't risk too much, and try to execute as close to perfectly as possible. Remember, trading is about probabilities, and as long as you go for more than you risk, you should be okay. All you have to do for, you know, for as far as you know, getting 2-to-1s is win 40, not even 40%. I think it's like 34% of the time, just to break even if you go for a 2-to-1. So I don't necessarily have to have a high win rate in order to make money and make consistent profits. But what I do have to do is always execute the plan. So if you want to know more, there's a Forex supply and demand course on the website, Trading 180, or you can, you know, before you do that, is, you know, go and watch the other videos. And if you want to know how to draw supply and demand zones, free course right here. Got the supply and demand order flow equation. Check it all out. Again, feel free to email me or inbox me at info@trading180.com. Leave a comment, like, subscribe, share with your colleagues, and hope you have a great trading week. Until the next video, take care.